In this podcast episode, Tom Bilyeu engages in a conversation with Arthur Hayes, co-founder of BitMEX and a prominent figure in the cryptocurrency space. The discussion revolves around the current economic landscape, the implications of debt, and the potential for an impending recession. Hayes articulates his views on the fragility of the financial system, the role of money printing, and the future of cryptocurrencies, particularly Bitcoin and Ethereum. Hayes begins by painting a grim picture of the current economic situation, emphasizing the unsustainable levels of global debt, which he estimates to be around 360% of GDP. He argues that this debt crisis has been moved upstairs to sovereign debt markets, where investors are increasingly reluctant to buy long-term government bonds. This reluctance stems from the realization that governments are unable to repay their debts in real terms, leading to a loss of confidence in these financial instruments. The conversation shifts to the Federal Reserve's response to the ongoing crisis. Hayes posits that the Fed's continued money printing is akin to pulling a rubber band further back, creating tension in the financial system. Each failure, whether in the banking sector or the housing market, releases some of this tension, but the overall pressure continues to build. Hayes suggests that we are waiting for a significant disturbance that will trigger a more profound crisis, potentially leading to a Great Depression-style scenario. As the discussion progresses, Hayes delves into the implications of money printing. He likens the process to a rubber band being stretched, where each act of printing adds more tension to the system. He argues that while money printing may provide temporary relief, it ultimately exacerbates the underlying issues, leading to greater instability. The conversation touches on the concept of fiscal dominance, where governments may resort to yield curve control to manage interest rates and prevent a collapse in bond markets. Hayes highlights the historical context of yield curve control, referencing Japan's long-standing practice of maintaining low interest rates to support its economy. He warns that the U.S. may soon find itself in a similar situation, where the government is forced to intervene in the bond market to maintain stability. This intervention could lead to a loss of confidence in the dollar and a shift towards alternative assets, such as cryptocurrencies. The conversation then shifts to the future of cryptocurrencies, particularly Bitcoin and Ethereum. Hayes argues that Bitcoin serves as a hedge against the impending financial crisis, positioning it as a put option on the sovereign bond market. He believes that as confidence in traditional financial systems wanes, more investors will turn to Bitcoin as a store of value. Hayes expresses optimism about Ethereum, viewing it as the internet bond that offers intrinsic yield through staking. He anticipates that as more people recognize the value of Ethereum, its price will rise significantly, potentially reaching levels between $750,000 and $1 million by 2026. This bullish outlook is predicated on the belief that the upcoming financial crisis will drive more capital into cryptocurrencies as investors seek alternatives to traditional assets. Throughout the podcast, Hayes emphasizes the interconnectedness of global events and their impact on the U.S. economy. He discusses the potential for geopolitical tensions to exacerbate the financial crisis, particularly as countries like China and Russia seek to challenge the dominance of the U.S. dollar. Hayes notes that the recent moves by these nations to diversify their reserves away from the dollar could have significant implications for the global financial system. The conversation also touches on the role of central banks in managing economic stability. Hayes argues that the current approach of relying on monetary policy to address systemic issues is flawed. He believes that the focus should shift towards fiscal responsibility and sustainable economic practices. However, he acknowledges that such a shift is unlikely in the current political climate, where short-term gains often take precedence over long-term stability. As the discussion draws to a close, Hayes warns against complacency in the face of mounting economic challenges. He emphasizes the importance of being prepared for potential disruptions and encourages listeners to consider their financial strategies carefully. Hayes advocates for a diversified approach, suggesting that individuals should hold a mix of traditional assets and cryptocurrencies to hedge against uncertainty.